Welcome to Finance Simplified, your go-to place for breaking down complex financial concepts in a simple way. Today we're diving into a question that many people have on their minds. How can you become a millionaire by investing? If you're wondering whether it's possible for an average person to build wealth just by investing, the answer is a resounding yes. But it doesn't happen overnight, and it doesn't require you to be born with a silver spoon in your mouth. The truth is, anyone can become a millionaire if they understand the fundamentals of investing and start early. You might think this sounds too good to be true after all. You may feel like you're just getting by with your monthly paycheck. But let me tell you this, investing is the secret weapon used by the rich to build and grow their wealth. The best part is that you don't need a huge income or specialized knowledge to get started. All you need is a plan and a little bit of patience. So how does investing turn you into a millionaire? Well, it all comes down to making your money work for you. Instead of leaving it in a bank account where it does nothing, you can put your money into assets that grow over time. That's the power of investing. It helps your money multiply, whether through stocks, real estate, or other investment vehicles. When we talk about wealth building, one concept stands above the rest: compound interest. If you grasp this simple idea, you're already ahead of most people when it comes to creating long-term wealth. Let me explain. Compound interest is when you earn returns not just on the money you initially invested, but also on the returns you've already made. In other words, your money earns money, which then earns more money. This is why compound interest is often called the eighth wonder of the world. Imagine you invest $100 per month into a diversified index fund, which historically returns about 10% annually, the average return of the S&P 500. After 10 years, that $100 a month will grow into approximately $20,000. Fast forward to 20 years, and you will have more than $75,000. By the time you hit 30 years, your initial monthly investment of $100 will have turned into $200,000. And after 40 years, even if you only invested a total of $48,000, you'll end up with $500,000 or more. This is how the rich get richer. They start early and let compound interest work for them. But what if you increase your monthly investment to $500? Suddenly, you'll be a millionaire in about 30 years. That's the power of time, consistency, and patience. Even if you start small, over time, your investments will grow into something massive. So now that we understand the power of investing, let's talk about where and how you should invest to achieve this type of growth. One of the best places to put your money is the stock market. But instead of trying to pick individual stocks, a smarter strategy is to invest in index funds. Index funds, such as the Standard & Poor's 500, invest in a broad basket of the largest companies in the market. This means you're not betting on the success of one company, but rather you're diversifying across many companies, which lowers your risk. These funds have a proven track record of delivering strong, steady returns over the long term. Warren Buffett, one of the wealthiest people in the world, has said that index funds are the best investment for most people. They offer you a low-cost, hands-off way to grow your wealth. Let's say you want to explore other investment options. Real estate is another powerful way to build wealth. By purchasing rental properties, you can generate passive income, which means you earn money without having to work for it. As property values increase over time, so does your investment. Many of the world's wealthiest people, including Robert Kiyosaki, author of Rich Dad, Poor Dad, built their fortunes through real estate. But real estate isn't the only way to get rich. If you have a passion or an entrepreneurial spirit, starting a business could be your path to financial freedom. While investing in the stock market or real estate is a gradual way to build wealth, starting a business can give you the opportunity to build wealth at a much faster pace. Many billionaires, such as Jeff Bezos, founder of Amazon, and Elon Musk, founder of Tesla and SpaceX, created their fortunes by building innovative companies. But starting a business comes with risks, and it takes time and effort to succeed. However, the most important investment you can make is in yourself. Learning about finance, improving your skills, and gaining knowledge will help you make smarter investment decisions. It's said that the best investment is the one you make in your own education, so never stop learning, whether it's reading books, watching videos, or attending seminars. The more you know, the better equipped you'll be to grow your wealth. But before you start investing, it's crucial to avoid the common mistakes that many beginners make. One of the biggest errors people make is not starting early enough. The earlier you start, the more time your investments have to grow. Don't wait until you have enough money to start. The best time to invest is right now. Another mistake is trying to time the market. Some people wait for the perfect moment to invest, thinking that they can predict when the market will rise or fall. The reality is, no one can time the market consistently. The key to success is investing investing regularly, no matter what's happening in the market. Stay consistent, and over time, the results will speak for themselves. Some investors also fall for get-rich-quick schemes, such as risky stocks or speculative investments like cryptocurrencies. These high-risk ventures can promise big rewards, but they can also lead to huge losses. It's much smarter to focus on long-term, steady investments. A diversified portfolio that grows gradually over time is your best bet for building wealth. One of the biggest traps people fall into is putting all their money into one investment. Diversification is key to minimizing risk. Instead of investing everything in one asset, spread your investments across different sectors and asset classes, such as stocks, bonds, and real estate. By diversifying, you reduce the chances of losing everything if one investment doesn't perform well. Another mistake is letting emotions take over when making investment decisions. Fear and greed can drive people to make poor choices, like selling stocks during a market dip or buying at the peak of a market rally. The best investors are calm and patient, focusing on long-term goals instead of short-term fluctuations. If you're ready to start investing, the first thing you need to do is decide how much you want to invest each month. Even if you start small, it's important to be consistent. If you can commit to investing $50, $100, or even $500 every month, you'll see how it can add up over time. Next, you need to open an investment account with a reputable platform like Vanguard, Fidelity, or E-Trade. These platforms allow you to easily invest in index funds and other assets. Once your account is set up, start with low-cost index funds like the Standard & Poor's 500 Index Fund, which has a proven track record of strong returns. Once you start investing, don't try to time the market or make frequent trades. The key is to stay consistent and let your investments grow over time. Keep adding to your portfolio regularly and let compound interest do the heavy lifting. Over time, you'll see your wealth grow, and before you know it, you'll be well on your way to becoming a millionaire. Remember, it's never too late to start investing. Whether you're in your 20s, 30s, or even 40s, the important thing is to start now. The longer you wait, the longer it will take to see your money grow. So, are you ready to take control of your financial future? Start today and watch your investments grow into wealth over time. If you found this video helpful, don't forget to like, subscribe, and share it with others who might benefit. And let me know in the comments, have you started investing? What's your favorite investment strategy? I'd love to hear your thoughts and experiences. See you in the next video where we simplify more financial concepts just for you.